Boom. Hello, folks. Welcome back to 3 at 3. For a change, I'm not flying somewhere today. So I'm able to get it done right here with you on the 25th of July. Let's get started with unusual option activity. And you know the drill. If you're already a subscriber, you know the deal is that we are seeking out the unusual, the larger than normal. And then we're looking for those to trade on the offer. We don't really care if they're sold on the bid. That may indicate that somebody's not as bullish or as bearish, depending if they're selling calls or puts. But it's not the same as those that want a leveraged bet. In other words, if you buy an option for $1, it could go to almost any price. It could go to $10 or more. And if you sell an option for $1, you can only make $1. So that's why we favor the options that are bought on the offer with what we have coined and are famous for, the unusual activity. This is yesterday's show, our Rebel Edge, which was both on the street, which it's been now for a month, as well as Yahoo Finance. Right now, folks, we get more views of our Rebel Edge than all of financial media combined. So in other words, if you're somebody who's used to watching CNBC or any other financial channel, if you watch Pete and I on this show, The Rebel's Edge, you're seeing something that is being seen by more people than have ever been watching any of those other places. How do we know that? Well, let's see. The street has 18 million monthly active users, okay? CNBC doesn't. Fox even doesn't. I love both those places. I'm just telling you the truth. Meanwhile, Yahoo has 110 million registered active users, and we've got more news coming for you, folks. But in other words, I'm just kind of highlighting for you why at 1 p.m. each day, Monday, Tuesday, Wednesday, Thursday, we have a travel day Friday, you should be watching the Rebel's Edge. I'll leave it up to you, but it's free. And you can see it on and listen to it on marketrebellion.com/edge. You can see it on thestreet.com. You can see it soon on Yahoo regularly, as you did in this case. And it's on Spotify, it's on YouTube. Yeah, it's everywhere. Streaming is crushing traditional media. And how about this one? Speaking of crushing, this was BBIO. And this one was $16.49 when we talked about the August 1750 calls. Now, this was at the tail end of June 21st, as you see. If you look far left side of your screen, you see the date and the time and the symbol, then bullish call spread and so forth and so on. Well, those 1750 calls exploded from that entry, approximately $4, to as high as $15.80. So nearly fourfold, 400%. That graph looked something like that because of a heart medication that they had some very good news on. So just letting you guys know that when we cite unusual activity, we have already filtered it. Our computers have already looked at it versus yesterday, versus last week, versus a month ago volume. When we say it's unusual, it's unusual. Does every single one work? We both know that's not the case, but it is about 78 to 80% accurate in terms of if they're buying calls, we're going to see a bullish move. If they're buying puts, we're going to see a bearish move. I try to reduce my risk by putting on call spreads, which is what this trader did. Just take a look again. That trader bought the AUG 1750s and sold the AUG 30s. How much did they pay for that? Well, when you look at it, they're about $2 and what do you want to call it? $2.45 or so. And you took this one to an astonishing return. That is why we follow unusual option activity. That's how we celebrate unusual option activity. All right, let's take a look at these because Microsoft's got earnings after the bell. Somebody didn't just buy this week's at the money call or out of the money call. They bought the September 390 calls. They're looking for 40 more dollars between now and September. Now, does it have to go there? No. Could it pop to 365 and those calls go from $3.50 to $6 or $7? Sure, it could. So Microsoft 350 is where the stock was. They bought 8,000. That's 800,000 shares of a $350 stock. That's a lot of money, folks. That's why we follow it. Uber was another one I'd like to highlight for you. They have earnings due the 1st of August. And guess what? The 4th of August expiring 45 puts, $2.50 out of the money, let's call it, are being bought in big numbers. So we're running right along with them, buying those puts. And then as we sell downside puts against it, we'll be in a put spread. We can make the differential between the strike we own and the strike we sell. You have to decide how you want to play it. Third and final of today's 3 at 3 is KeyBank. Key, $12.16. They bought 5,000. That's 500,000 shares, 500,000 shares equivalent ownership at the 13 strike in September. So third week in September. So we're talking a month till August and then another month. So 2 months approximately into the future. They're looking for a move and they paid 48 cents, which means $48 because every option is for 100 shares. So a 10 lot would cost you $480. If they're right, and this moves to the upside, and perhaps we go to $1 on this trade, well, you'd make double your money. You paid 50 cents, it goes to $1, you make double your money. $500 investment could go to $1,000. Obviously, it could go much more than that. Depends on what Jay Powell does this Wednesday with his comments after he moves up rates by another 25 bips and so on and so forth. But it's a controlled amount of risk. It's not the same as buying 1,000 shares of a $12 stock, which would be $12,000. You can control the upside of this one for 2 months for basically $480. That's why I love trading options. And that's it for us today, folks. Go to marketrebellion.com/get started. That's marketrebellion.com/get started for more. And I'll see you tomorrow.